But look, I think you're at a crypto conference. I'm sure you know that for years, crypto has promised financial access and economic empowerment, but we're finally seeing that with stablecoins. Stable, dollar-denominated value, cross-border money with near-instant settlement, 24/7 availability, and low-cost programmable transfers. Now, our panelists here today, they know that this matters most for people around the world who are battling financial systems that don't work, systems that are slow, exclusionary, or broken. So to understand the use case, we don't look to Miami. We look to crisis zones like Sudan and Myanmar. We look to emerging markets like LATAM, Southeast Asia, East Africa. So guys, to kick us off, I thought it would be helpful to actually give us a bit of a foundation before we dive right into the stablecoin piece. You know, what are the rules of money that you think people take for granted in the US that, you know, those same rules disadvantage people in other parts of the world? Melyn, do you want to kick us off?
Well, I probably came to blockchain in a slightly different way than most of the people in this room. My background is in humanitarian aid. So I've spent the last 15 years working in field locations with vulnerable populations, trying to make sure that people can just stay alive. So sometimes financial access feels like a nice to have, not a must have in those immediate crisis response environments. But one of the things that has always struck me is that when we start talking about how do you actually reach populations, people sort of know the challenges of last mile, but they don't really know what that means.
If you haven't experienced it, it's
hard to know, right? They've never experienced it. If you've never had to carry a bag of cash across a border, because that was the only way to do it, then you don't really know how lucky you are to live in the tiny slice of the world where your financial institutions work for you. If you've never had to ask yourself if this is a useful technology, you're very lucky, because that's not how the global majority live.
Anyone want to add to that? What have you seen in your world, Nick?
Yeah, like at Tala, we're targeting the global majority users, people in emerging markets that the one thing that sometimes we take for granted here that we see firsthand at Tala that is not global, it's access. Access to reliable, access to funds, access to protection towards inflation. We take this for granted here. But until you experience their daily life where everything's a lot more unstable, everything is invisible to them. So the fact that at Tala we're providing access to credit to those people that need it the most in a very stable and consistent programmable way.
So Nick, you're delivering microloans with stablecoins. Melyn, you're looking at being able to deliver grant money with stablecoins. Reeve, when people are looking at stablecoins, why is this so attractive? You're looking at things like on-chain banking, for example, among many other use cases. But what do you think is the main attraction in these areas where we've got such problematic systems?
Well, the whole purpose of stablecoins is to enable the world to function on an entirely new set of rails. The rails that we've had to date, the current traditional financial system, is inefficient and slow. Why do you allow your bank 1 to 3 days to move money when the technology is there to move it in 3 seconds? And that's one, because regulation, and two, because it was never possible before to move it in 3 seconds, but we're finally there. What's enabling that? Stablecoins, which is simply that same type of money formatted to move on a new system that does move in 3 seconds, formatted to move on a system that provides global access to the whole world. Anyone with an internet-connected device now can have high-quality financial services. And that's what stablecoins enable. That's why they're so powerful. And that's also why the rest of the world is finally leaning in. The institutions are finally leaning in because they realize they can now plug in globally and update and make their own internal systems much more efficient.
Yeah, so I think maybe some years ago people might have thought that stablecoins were a workaround for some of these issues, but it sounds like this is the beginning of an entirely new system, a replacement system. Would you agree?
Yeah.
Yeah? Okay, and as you just mentioned, some of the technology's biggest advocates now are the incumbents that help me reconcile this. Maybe crypto actually set out to, to go against banks, governments, institutions. So can you help me understand what's changed here? Why are the banks, the institutions, the governments so excited about this crypto-based technology?
Well, I believe they've always been excited about it. They just weren't able to even participate or look at it because they would get in so much trouble in the past.
Yeah.
And the whole world does look to the US at least to lead a lot of things, especially in regulation. The US was so dead set against crypto until the current administration has finally changed that. And that's it. It's regulatory clarity and an awareness or an ability to lean in and not get slapped. And the reason why they want to lean in is because it's such a significant upgrade to their systems. And as I shared, it expands their markets, it makes their internal workings more efficient, and it's ultimately going to be better for the consumer at the end of the day because the consumers are going to win. We're going to have products that reach the rest of the world and provide them real access to high quality financial services.
And I think you're talking about expanding the reach of the more traditional financial infrastructure, the banking system. We see this at Tala firsthand. There are about 4 billion global majority users in emerging markets that are totally invisible to the more traditional banking infrastructure. And we're seeing that every day. I'm sure you're seeing that as well in your markets. And this technology and stablecoins bring a whole new set of customers to the more traditional financial systems.
Yeah, we say this a lot. The traditional financial infrastructure was sort of built the same way that the British built railroads. They weren't built to connect people. They were built to extract wealth out to the coasts and over to Britain. So when you introduce something that now can connect people in a totally new way, I think we're really leapfrogging some of the limitations that are inherent to having built a financial infrastructure that was designed to benefit a small few to now something that can genuinely connect someone in rural Montana with someone in rural Bhutan as quickly as it is to send a SWIFT transfer.
Is there any risk that we might actually just be reinforcing old rules on new rails? Like, where could that risk show up, if so?
Well, I'll share my perspective on that. There's always that risk, right? It's because it's the people that use the technology that get to use it for good or for evil. But the difference is, when you think about how it's been traditionally, it's very opaque. There's no transparency. There's no audits. Especially, look at the financial collapse in 2007. No one knows what happened. But now it's all on chain. So we do have a level of transparency and clarity that you can get through these transactions. And when regulations catch up to force people to use the technology in the right way, I think that, yes, there will always be risks, but that type of technology alleviates a lot of the issues that we had in the past.
Melyn, Nick, would you add to that? I guess what you're seeing in these parts of the world where you're working as well?
It's certainly something that we talk about a lot with donors, so large institutional donors who are sending usually taxpayer money for aid programming. When we say we want to do this in stablecoins or in crypto, their first reaction is, well, isn't that really risky? And it's sort of like, well, what we're doing right now is risky. We, to fund the entirety of the healthcare system in Afghanistan. One of my colleagues was working for a UN agency to deliver $40 million a week on a pallet, just cash. So that is quite insecure. The second something becomes cash, then you also lose complete visibility of it. So in an industry like the aid sector, where we need to account for every single donor dollar, to do that requires an enormous amount of administrative effort. And so to be able to say, look, by moving this to blockchain rails, we can enable you to have all of the oversight that you need, all the compliance, but instead of having 12 accountants on staff, you can have 12 child protection experts. If you're Save the Children, that's a really obvious decision to make.
And I think one way to address the potential risk, bringing that from the more traditional system, one is transparency. You touch on that. But it's also the abstracting the complexity of this new system. Yep. It is a new system. It is a new way to maybe access money. And not everyone is really well aware of how it works. It can be complex to some people. So I think where we see a lot of adoption is when we make that very easy to people.
Yep.
They don't even need to know often that is stablecoin or blockchain is involved, and that's where we get the true adoption, avoiding some of the risk of the previous lack of transparent systems.
Okay, shifting gears a little bit. I think a lot of people are very well aware of what stablecoins can do in terms of moving money cross-border. But with the rise of stablecoin 2.0, as you called it, Reeve, we're starting to see some really interesting new models, whether it's yield-bearing assets, new RWA-backed models, a whole bunch of cool stuff. And particularly, actually, maybe you could give us a little bit of an introduction, just in case anyone isn't familiar with stablecoin 2.0. But what I was more interested to understand is you've also said that the people who put money into these systems, like customers of banks or users of stablecoins, should be the ones to share in that value. Are we seeing that today? What would a system look like if we could actually experience that today or in the future?
Well, it's not quite there yet. It's just like when I shared, you can move money in 3 seconds. Why does it take 3 days in your bank? Right now, you can put money into a system and you can be the one that earns the yield on it. We have that technology. And that's the movement for Stablecoin 2.0, which is give the yield to those people who put it into the system. This is very different than a yield-bearing stablecoin, because you hear, oh, if you want to share the yield, if you have the stablecoin, you get the yield. That's an investment. You have to hold on to that stablecoin to earn the yield. That doesn't create velocity within the system. You put the money in the system, you shouldn't have to hold on to it. You should still be able to use it. That's the tenets of Stablecoin 2.0, where people are putting money in the system, the yield is stripped, it's in a different token. You mentioned RWAs. All these traditional assets are being tokenized, and once they're tokenized, it gives them more utility. One of those things can be as backing for stablecoins. And since we have all this technology, you split the yield, you get this stablecoin. And at the end of the day, we have technology and the ability to share that yield programmatically with the people who deserve it most. Because typically the rent seekers or the centralized institutions who extract so much value, it's because there's tons of overhead, tons of regulation, all of that has been compressed into technology. Now we have the ability to share those yields with the customers. And the Clarity Act and regulation is slowly getting there in baby steps, because they're trying to slow it down, but they won't be able to stop it.
Yeah, it seems like there's a lot of people pushing back against that, but perhaps they won't be successful. Are you seeing anything like that too? I mean, I could imagine that a system like what Reeve is describing could be immensely empowering to people in different parts of the world, say maybe not in the US where they have access to traditional banking.
Yeah, I think we're really excited by what it means when you make beneficiary-led decisions. So oftentimes we say it's not appropriate for us to be going into a situation where people are having an incredibly vulnerable experience and saying, you must now adopt this new technology in a way that feels very frightening. At the same time, we want to be able to expose them to those different ways of thinking about money, thinking about value, so that as and when they are ready and they're in a safe position to do so, they can advocate for that greater financial access. They can have access to tools they wouldn't have had previously. Even some of the things just around programmability and around the way that we think about responding to crises, we see huge opportunities in how we can lock funds up so that they're prepared to move in the event of a crisis, and then automate the process by which they're actually sent into communities to respond in advance of an event. Lots of really amazing things that are happening there in terms of what we can achieve, but really, with each one of these different touch points, being able to expose people to new ideas and new ways of thinking about money is, I think, a really interesting part of what we're doing.
And I think we're seeing some interesting ways of local stablecoins that will give some interesting returns. Like at Tala, for example, we operate in about 7-8 different markets, in emerging markets. Obviously, having access to a digital, programmable US dollars is a big interest, but more and more we're seeing local governments trying to set up their own token, based on their own local stablecoins, and then provide in returns a lot of value, yields, interest, if there is volume of activity happening on their own local stablecoins. So I think we're going to see an interesting convergence of some use cases around global stablecoins and the value of that and the efficiency of that, but also a lot of interesting interest yields on local stablecoins as well.
I think we've heard a lot about that even at the conference this week in terms of that interest of being able to issue your own stablecoin and reap all those benefits. I want to share a really interesting stat, which, by the way, I think this space is moving so fast it's already outdated. I just saw the new stats from today, but bear with me here. It's a really recent report on CoinDesk, and they were saying that North America settled $5.32 trillion in stablecoin volume in 2025. And that represented 16.1% of global activity. But more than 80% of that actually occurred outside North America, and 99% of it was with USD-denominated stablecoins. So there's obviously massive demand for USD-denominated stablecoins, and it obviously solves real problems. but it can obviously create tension with local governments. So we're seeing this demand here and maybe an intent to issue local stablecoins, but perhaps we're not quite there yet. So why do you think that's moving slowly?
Well, I'll tell you.
Please
Because
do.
if you stack rank some 182 currencies or so around the world, the US dollar is always number one. And if you're in the top 10 of those currencies as your local currency, you're okay. But if you're below that, you would love to swap to a dollar. So it's not that a US dollar stablecoin's better, it's that the US dollar's better. And all these countries want US dollars. There might be a conflict with the citizens of the country and the people who control the country. They want them to use their currency, but it's too inflationary and not stable. So it's as simple as that. There's demand for dollars. It's a superior currency.
How does that...
Until they get to Bitcoin. But that's a different conversation.
Yeah, we need another panel. Melyn, how does that show up for you? Like, do you see that that's maybe a fear, like a local government's worried about local destabilization or USD influence?
Yeah. The humanitarian aid sector was already fairly dollarized, so it was not uncommon for programs to be denominated in dollars, and then all of the accounting was based around that. What it did mean was that we have programs who, in the conversion with highly volatile local currencies, were losing $100,000 regularly just to that instability. And unfortunately, the way that the model works is that that risk really gets pressed down onto the most vulnerable local actors who are essential to our aid response. So we would say to a local partner, we're going to denominate your grant in dollars, but if that compresses and your grant is suddenly worth 30% less, that's too bad. Now you still have to deliver all those activities, but we're not going to give you any more money. And so what we see is that for those local partners, there's a huge benefit to them to being able to hold their grant funds in something that is more stable, and then off-ramp as and when they need to for spending. We see that it ends up saving them a considerable amount of money and protects them from some of that volatility. Humanitarian response is something that happens in an acute crisis. So generally speaking, if something has gone wrong, the currency is feeling it. Once you shift to development programming, which is looking at things like improving livelihoods, trying to stabilize economies so that those local currencies can be more stable for the population, that's where I think there is a more complex conversation happening, and we see that happening particularly at the level of the UN agencies that work directly with those governments. So there it's more nuanced, but in humanitarian response, it's whatever gets there fastest, preserves the most value, and helps the most people. So US dollar stablecoins win.
All right, we're running out of time. I wanted to put this to all of you. Reeve, at Token 2049 last year, you grabbed headlines by saying that all currencies would be stablecoins by 2030. And I wanted to ask all of you, what do you think could be an obstacle in the future that would prove Reeve wrong?
Well, first I'll clarify the statement.
Okay.
And I do believe that, because what is a stablecoin? It's just money that works on a blockchain. It's just money that works on an upgraded system. So by 2030, do I think all systems will be upgraded? Absolutely. Regulations catching up. Everyone wants to lean in, and they want to upgrade their system. So yes, I think it's on the horizon.
But what could prove you wrong? Like, what do you see as like one of the biggest obstacles that we need to be focused on to move it out of the way so that everyone can be actually achieving or reaping the benefits of stablecoin adoption?
Well, really, to reap the benefit, it just means your transactions are quick. They're instant, they're free, they're global. You're instantly connected. And by 2030, just imagine what your AI agents are going to do. I think we'll get there before 2030. So that's all it means, that all currencies are stablecoins. It just means transactions are more efficient, faster, cheaper, better.
Nick, do you see any challenges in your future that would slow you down?
Yeah, I think the main one is really abstracting the complexity. We know it's already happening. You know, stablecoins, blockchain is behind a lot of the system today of marketplaces, apps, wallets, banking system that are powered by the blockchain and stablecoins. Where we're going to see the next adoption from mainstream users in all markets is really when we make it so easy and abstract it from, you know, I'm just accessing US dollars. I'm just accessing programmable money, which is reliable, and I've got access to it anytime I need to. And in whatever wallet, banking system, agents that I'm using to make any transactions. Once we get to that level, I think it's going to be very mainstream and seamless for everyone.
Melyn, what obstacles are you working on getting out of the way?
Yeah, I think coming from the perspective of the humanitarian aid sector at Coala Pay, it all comes down to trust. currencies ultimately depend on people trusting in them and the value behind them. And I think, unfortunately, with stablecoins or any digital currency, you have a third party in that equation that you can't control, and that's internet connectivity. So in a place like Myanmar, where the military junta just turns off the internet when they don't like what's happening, then you have an external factor that you can't control for unless you are also controlling for your ability to stay connected and do transactions regardless of that status. So I'm really excited by projects that are looking at things like mesh networks for transactions, getting those spread out into communities so they can trust that even when there's no power, there's no connectivity, they can still transact. I think that will go a long way to building that trust long term.
And you've mentioned too that when we look at these frontier markets, these emerging markets where they're solving very real problems like that, I guess the idea is that someday those kind of innovations could scale to developed markets as well, right?
Yeah. I mean, M-Pesa set the standard, and it started in Kenya for all mobile money. So, there's a lot that we can learn by looking at what happens in frontier markets where people have to actually problem solve, because that's where you get really interesting solutions.
Well, thank you so much, guys. It's been a fascinating panel. We've been told to cut it within 1 minute so that we can continue on. But I really appreciate you helping us understand a little bit more about how stablecoins are being adopted outside the US and other developed markets.
Thanks, Leah.
Thank you.
Thanks, guys.